Hello everyone, I am Deepti Kamble. Today I am going to present financial accounting assets. Financial accounting. Financial accounting is a branch of accounting that involves preparing and reporting a company's financial statement to external stakeholders using accounting standard and principle to provide information on a company's financial performance and position. The financial statements, including the income statement, balance sheet, and statement of cash flows, are used by stakeholders to evaluate a company's financial health and make informed decisions. Assets. An asset is something that has value and can be owned or controlled by an individual, company, or organization. Assets can take many forms such as physical property like real estate or vehicles, financial instrument like stock, bonds or cash, property like patents or copyrights, or assets like branch goodwill. In accounting and finance, assets are typically classified into two main categories. First is current asset and non-current asset. In current assets are those that can be easily converted into cash or consumed within a year, while non-current assets are those that are expected to provide value over a longer period of time, such as property, plant, and equipment. Assets are important part of individual or organization's financial situation, as they represent potential sources of future value or income. However, it's important to remember that not all assets are created equal, and some may carry more risk than others. Definition of asset. An asset is something of value that is owned or controlled by an individual, company, or organization. Assets can take many forms such as physical property, financial instrument, property, or intangible asset are important part of individuals, organizations' financial situation as they present potential sources of future value or income. In finance, assets are classified as current and non-current asset, and it can be used to measure a company's financial health and performance. Features of assets. Assets are something of value that can be owned or controlled. Asset can many forms such as physical property, financial instrument, intellectual property, or intangible asset. Asset have potential to generate future value or income. Objective of asset: to represent potential sources of future value or income, to measure financial health and performance, to provide a basic of decision making by individual and organization, to secure loan or other financing, to serve as collateral or loan or other financial transformation. Asset valuation. Asset valuation is the process of determining the value of an asset or group of assets. It is important task in finance and accounting, as it is used to determine the worth of an asset or portfolio and to make informed decisions about buying, selling, or holding assets. There are several approaches to asset valuation, including market value, book value, or intrinsic value. Market value is the value of asset that can be determined based on current market condition and supply of demand, while book value is the value of an asset as recorded on a company's balance sheet. Intrinsic value is the value of asset based on its underlying fundamental, such as earning potential, growth prospect, or asset quality. Asset valuation is often done in conjunction with financial analysis and may involve the use of financial models, discounted cash flows analysis, and other valuation methods. The ultimate goal of asset valuation is to determine the fair value of an asset and to use the value of to make informed decision about buying, selling, or holding an asset. In finance, asset can be classified in different ways depending on the purpose and analysis. Here are some common classification of an asset. Current asset. Assets that are expected to be converted into cash or consumed within a year. For example, cash, securities, and inventories. Non-current assets. Non-current assets are expected to provide value of a longer period of time, typically more than a year. For example, property, plant, equipment, long-term investment. Liquid asset. Liquid asset that can be easily and quickly converted into cash with little to no loss value. For example, cash, market-based security, etc. Illiquid asset. Assets that are difficult to convert into cash quickly without incurring significant losses. For example, real estate, long-term investment. Tangible asset. Physical asset that can be seen and touched. For example, property, plant, equipment, vehicles and inventory. Intangible asset. Intangible asset that have value but cannot see nor touch. For example, patent, trademarks, copyrights and brand. Financial asset. Asset that represented a financial claim and another equity such as stock, bonds or derivatives. Operating asset. Asset that are used in normal course of business operation. For example, inventory, property, plant and equipment. Non-operating asset. Assets that are not used for the normal course of business operation. For example, investment in other companies or real estate held for investment purpose. Assets are an important aspect of individuals' organization's financial situation. They can be classified in various ways such as nature, time horizon, a purpose, and are used to determine the value of an equity's resources. Purpose, asset evaluation and management are for making information decisions about buying, selling or holding asset and for ensuring long-term financial stability and success. Thank you.